Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Monday, the 26th of August, 2019, about 3:15 p.m. Central Daylight Time. And because we're just after that time frame, you can see these will be the settlement prices in the stock indices. Now, moments ago, and I am talking the past 2 minutes as I'm here, I saw that Johnson & Johnson had been found guilty by a judge in Oklahoma of the opioid case. However, instead of $17 billion that they could have been liable for, we're talking $572 million. Big difference in the numbers. It'll create a lot of uproar, but the stock is up about 4% after the market. Metal markets came down today rather hard. Now, I started off 5:30 this morning or so recording my videos. And my morning subscriber video, I called it Bollinger Band Day. And that's because I was looking at where the stock market had fallen to, and I'm talking at that hour in the morning, where we were up to in the metals. In fact, last night I even wrote my clientele, and I warned them. I said, you are up at a zone in the gold where I'd be very cautious of this market because you're hitting the Bollinger Band top. Forget fundamentals. That's what it was. Today we saw the president wrap up his meeting. He's on his jet coming home, as I understand it. And he wrapped it up with the G7, and he did a very good job. He was presidential. No arguments like he had at the G7 meeting in Canada last year. He got along perfectly with Mr. Macron. It appears that he opened the door up to China again by saying how smart the Chinese president is. And of course, he said, he'd meet with Iran's president. Well, number one, he's not meeting with anybody from Iran. Number two, it was a stepping back from that danger line. That's what I'm doing right here. When you get too close and the rhetoric got so overheated. We saw the vice premier over the weekend say calm. That's what's needed, calm. And the president was calm today, and you saw the difference in how the talk went there as they had a news conference at the end of the day. Dollar up today rather smartly, up 42 points. And even though gold came well off the high, it's still up on the day with other currencies down mostly all day long. We'll be waiting to see what happens with Boris Johnson on his Brexit plan. The word that even the U.S. was willing to talk to Iran weighed on energy prices today. So let's take a look at what we've got. We have a market, if you look at weekly area chart of just closes, we have a market that had corrected, getting a little bounce. That's the best I can say about it. When we look at this chart action, you can see where the resistance is in the market. For all purposes, the 29.45 level, right in that general zone. Today we reached down, made a lower low than we have recently. We still have the higher high. That's not a trend. Having a higher high and a lower low, it's a market that's out of whack. Where are we? We're at August 26th, right? This is the last full week of trading before we get into that first week of September. We're not open on Monday, so you'll get a couple of days of this type of action in the market. And one thing I want to say, big up day on a Monday does open the door for a Tuesday reversal. When we take a look at where the market bounced, look at the 200-day moving average of closes. Look at it back here. I know I was on Fox recently and said I wouldn't be surprised if you came down, and that was another zone you can attack. Now, on the way up, I'll say it right now, I wouldn't be surprised if resistance starts showing up from 28.96 to 29.15, the 18-day and the 100-day moving average of closes. There, the green is the 100-day. In looking at the Bollinger Band, that's why I called today Bollinger Band Day. Look at the Bollinger Band, the black dashed line, and then the 200-day. You had two layers of support come in, and I think that's where some short covering came into the market. We hadn't seen, remember this, the president's news conference with Mr. Macron. These lows were made earlier than that, and then the market regained and kept gaining throughout the session, basically, because nothing was going wrong. Yay. When we look at momentum on the slow stochastic, it had come down and it's still not turned itself up, but it's not pointing sharply lower either. The market is sort of just hanging there right now. So I'll stick with the resistance idea and evening up. Maybe the worst for a day or two is past the market, maybe longer than that. These challenges of the 200-day have produced nice results afterwards. When you come to the NASDAQ, you didn't get to the 200-day. You certainly hit the Bollinger Band. And from there, you rallied all the way back up now into the 18-day average of closes. So I'll stick with what I teach. What I teach is the first challenge of a Bollinger Band is often a zone that pros take some money off the table. So if they're short, that's a zone they'd cover. If on the way up, it's a zone they'd come out. Can the market break through there? Of course it can. But you're looking at times. How narrow is the band versus how wide the band is? This is pretty wide. Let me just take this off. This is what you looked like on Friday. So I would still stick that between here and here, if you get down, there's going to be a support zone. And that's basically what happened. In the Dow, you went down to the 100-day average. Let's take this back to Friday. On Friday, you finished at 25,670, which was just over the 100-day average of closes. Now, if the market breaks through that, the next support's the lower Bollinger Band with resistance back at 26,0665. You went down today, hit the Bollinger Band, reversed back up, and you'd missed that by, well, you're not far, 70 points away. So I think the pros took some money off the table. And coming in, you weren't trending. You still had a higher high, lower low. Look at how these key averages were holding the market. And again, the market seems to be stuck in them. In the Russell, where'd you go down to? The lower Bollinger Band. You've been under the 200, the 100, and the upper Bollinger Band, and the 18-day average. So the only thing under the market, and it doesn't mean it had to hold it, was the Bollinger Band. But it's done a pretty good job each time it's been hit if you've got a wide range. When you get these narrower parts or when it changes on you. So just beware of that, but the bounces here, I'd look for resistance still at the 18-day average, and I'll say it again. Big rallies on Monday often lead to Tuesday reversals. In the VIX, you came back to the 18-day average zone. You got to 1906, that number's 1895. You finished 1932, down 55 on the day. This is still a zone that I'm looking at, but I don't see a trend. I see the higher high and the lower low, so I don't see anything to do there. When you come to the bond market, you made a run towards that upper Bollinger Band and couldn't quite get to it. By the end of the day, looks like you're going to finish down on the session. You're in an overbought condition. As you see back here, you lost the embedded reading right over there. You made a run for that number, rallied back, and you're still in a correction. You could go back there. You don't have to. Are you trending, though? No. Got a higher high and a lower low. You have bias up, and you have momentum pointing down. In the 10-year notes, well, this is classic. Here you are in a market that's not in a narrow band at all. If you rally, the upper Bollinger Band could be the resistance. It's a very different setup than you have over here. You got there, and the market backed off from that high. That was 131.15. You're at 130.27.5. In TLT, unlike the futures market, just sort of drifting, but it's still not trending. You have the lower low, the higher high. So you've got momentum drifting to the downside, the bias up and no trend. Difficult market. In the dollar index, 2 days in a row where you hit the 18-day average. You were under it, had a bit of follow through and came back today over it. Are we trending? No. You've got the higher high, the lower low. You're over the 18-day average and momentum is just flat. Eurocurrency got up to the resistance of the 18-day average on, this was on Friday. You retested it today, got thrown back. We call it the line in the sand, don't we? It's because that's a zone that the market often goes to try to figure out what to do next. In the meantime, you're in an oversold condition with a down day. And I don't see a trend because you got the higher high, lower low setup. British pound, you've challenged the upper Bollinger Band and you've run into the brick wall. Now, this is a little different pattern than before. This is trying to develop that sideways action and an uptrend. What's the other part? You're overbought, momentum starting to lack here, support back at the 18-day average. You go neutral if you hit 120, 120, because that would give you the higher high, lower low pattern. In the Japanese yen, let's step back. Here is the market worried with all of Friday's 700-point break in the Dow and so on. If you get up to the upper Bollinger Band. I'm looking for the pros to come out. Why? You've got a wide band here. Market goes up, hits it, goes right back to the 18-day average of closes. So, by the way, if you take my charting course, honestly, it's not expensive, 170 some odd dollars. You learn these strategies in it. And me telling you them and you learning them are very different. You'll learn what you're looking for, whether it's a stock, a real estate chart, an options chart. A chart's a chart. Take the name off it. When you take my course, I remove the names from the charts. The reason is it's all about the pattern and where the thrusts are in the market, at least part of it, especially if you're using Bollinger Bands. In looking at this market, lower highs, but if we take a look at this low, 97.65, and go back to this one, it's 9,500. So we actually have a pattern here that's developed temporarily into lower highs and higher lows. That's pretty neutral the way I look at it. The market is oversold, downside bias in the market. Should it extend its break, I look for the Bollinger Band. But there's a warning sign. You have an outside day down. If you hit that, I call that springing a bear trap in the market, and I look for the closest moving average, which is the 18 in this case. When we go to Brent versus WTI, keep in the back of your mind that Brent goes off, I think it's August 30th. So the last trading day is coming up. So I'll watch it here for a bit, but I'm going to be having to switch you over to the next contract month because I think your broker would get pretty upset with the fact that you're trading October Brent. At least I would as in our firm. But you have a pattern that you can see is given a nice rally where the Brent is gaining on the WTI momentarily. The pattern is still one of lower highs, and now the question is lower low. I don't know what you got right here. I think the market's just fighting its battle at the 18-day average of closes. When you come into the WTI, which you have more time to trade yet, you got the higher high and the lower low. That is not a trend. Momentum turning down, resistance, the 18-day average of closes. One of the things you got to keep your eye on our oil is these new pipelines that are now active. This market, in order to get those pipelines producing and making money, they lower the price in them. As they lower the price to use them, you're getting more oil to the market. The differential sometimes is $3 to $4 a barrel. That's a lot of money. So you got to keep your eye as to what's, not a barrel, a gallon, on the transportation cost, on the transportation. I think the transportation goes by a barrel. I'll check that for you. In the gasoline market, resistance pretty clear, the 18-day average. This market can flip-flop and turn bearish on you if it gets under 150.21. Why? Because you could end up with lower highs, lower lows, which you don't have right now. You got a lower low and a higher high, which would put into play wherever the Bollinger Band is. But I'm not looking for a big break off of that because the Bollinger Band is jumping right now about 150 points a day. So that jump would put it up near the 148 level? I don't know. I'm not saying you can't get there. I'm saying that the pros would be under that, probably doing some covering. And what you've now done in nat gas is you've developed sideways pattern. I think you see it when you put the Bollinger Bands on. You can see the price drift. You've got a lower and low pattern here. Now you got a higher high. No trend as I see it. Momentum up, bias up, but not trending. Resistance to 225.50 level. We have 1 week of warmer weather forecast for us coming up next week. Then as we get later into the September phase, the weather is not as hot. I mean, just think about it. It's rare that we get really hot Septembers. You can get it. I'm not a weatherman. But you start cooling down a little bit, and that changes demand. One of the things you want to look at, especially if you're looking at Bollinger Bands that get stretched out, sometimes I'll run, not every time, my pivot points to get an idea. Are they coming in where those Bollinger Bands are? It's nice when everything comes together. So the first thing I did is I created for you 3 videos. The first one teaches you the formula, and you don't have to do it. But once you learn the formula, you understand the concept. You get the pivot point. You get what's called resistance level 1, resistance 2. FX traders can carry that out even further. They'll go out to, I've seen numbers 5 on them, because FX is such a big market and it seems to swing in straight lines. Well, that's what you get in those. So it gives you an idea of where you're at. The next thing that I did is I teach you how to plot it on a chart and what it looks like. So you're going to get your pivots, then you're going to see as the market gets up to a resistance point 1, are you looking for it to pull back down towards that pivot? If you get down to the support 1s or 2, what are you looking for them to do? There's different rules, and I try to give you the ones that I think are the most popular. I don't walk on water, so I don't have all the rules that should maybe be there. But I do tie momentum to it, which is different than most people do, and I explain how you tie that together. So if you're looking for another tool, maybe this fits into that toolbox of yours. It is free. How do you get access to it? You go to our website, www.iraepstein.com. You're going to see that we have a free offers click-on area. Click on it, it'll take you to the page where you sign up for the different offerings that we have. You can always call my staff as well, or you can click up here and it'll take you right there. In any case, I'm Ira Epstein. You have a great day, and I'll talk to you tomorrow.